beginning business bloopers. Oh, you thought I was gone, but today let's talk about what's really going on in 2021. We got the pandemic, we got people talking about the SBA, the PPP, and where do you fit in? Are you the up and rising business that started, now you're panicking? Or did you apply for the loan and knowing that you didn't have no full intent to start up a business? Or did you just really want it and you listen to those videos out there telling you, oh, go get an LLC, oh, you'll be protected? Did they ever tell you it's more to it than LLC? It's way more to it than that. But I'm going to just narrow it down because today's topic is going to be about LLC. I'm going to define it. I'm going to tell you the what ifs and everything that I possibly can, and with my knowledge of 17 years working with the Internal Revenue Service. I hear so many gimmicks talking about, oh, they came after me because I own 40,000. Somebody's telling you a storyline to get you to listen to their social media platforms. They're not telling you the whole detail of what happened to the person. They're just kind of a little bit exaggerating the truth about the judges and stuff. They didn't tell you that there were several letters of notices or beginning steps to do a preventive method, and a person just actually ignored them. Usually, if a person is in court, it wasn't because that one particular year they decided to come target for them. It's a lot of things they noticed that went wrong. A lot of them started these LLCs or these sole prop businesses or independent contractors, whatever they want to call themselves, and didn't have a clue because they was listening to those social media platforms. I can get you a SBA loan. I can give you a PPP loan. There's more to it, like I said, in all of my episodes. There's so many steps to easily to ignore and forget. That is a requirement. Some people don't think it's a requirement, but sooner or later it will. So my thing is, why are you starting your LLC and you don't even have the finances coming in to even be classified as one? It's not that serious. Why you can't just start out small? See where your business going. Start getting in the habit of just being a sole prop or independent contractor. Then build yourself up to those steps. Why is it the need to get a limited liability company and your finances not even where it's supposed to be to want to have a LLC? You trying to do it in the beginning. Really? Now you wonder why you're in the pickle. Now you don't make the income. You ain't either falsified these documents. You ain't even filed the paperwork or the returns. You claiming that you got employees and you really don't, but you don't know you have your payroll taxes. You still got to file your tax return, your payroll taxes. That's what they don't tell you to get in debt. The only thing they can tell you is, oh, you can buy your car with your EIN. You can do this and you can do that with fictitious papers. None of your stuff lines up. You shouldn't be in business. I'm just saying, it's more to it than listening to people convince you that you can do it and you don't have the ability to know that you can do it. It all sounds easy when it's said and done, but reality, you got to wonder, is they just getting my money for this workshop, or I'm just paying attention to this membership so they can help me? They can't give you ambition. That's true facts. So we're going to dive in deep and talk about the LLC and understand the true meaning of it and where you should be, and making sure that you make the right sound decision, because maybe you're not ready for the LLC yet. Your income not. Your commitment is not. Because it takes commitment or a lot of bread to pay someone to assume that they know what you're talking about and where you're going. They're basing it off the information that you're giving them. And so you think that they're going to be liable for your mess and your screw up. Whatever you get, they can modify and get you more trouble than what you need to be in. Let's just dial it a little bit back. So just stay with me. Don't go to sleep. Whew. One of the number one questions, should an LLC owner take a salary? Generally, an LLC owner cannot be considered employees of their company, nor can they receive compensation in the form of wages and salaries. So you want to know, how do they get paid? Members report LLC profits as personal income and pay taxes under the standard IRS tax bracket. The LLC doesn't have to file any tax return, but the members have to report income on a Form 1040 Schedule C, profit and loss from business, and filed a self-employment tax. See, there you go. Now, knowing how much money does a LLC has to make to file taxes, well, just like any other, whether if it's self-employment, whether it's independent contractor, or just hobby, the set amount for you to report as income is $400. Anything that exceeds over $400, you're required to file a Schedule C if your LLC income exceeded $400 for the year. If a one member LLC did not have any business activity and does not have any expenses to deduct, the member does not have to file Schedule C to report the LLC income. So keep in mind, you do not have to report if you did not earn the income. Say one, if it's a partnership, one made the income and the other one did not. Only one person will be reported, and that's the one that made $400 or more. The other person does not have to report it. Now, one of the biggest things is, can a single member LLC owner be on payroll? No. The answer is no. A single member LLC cannot issue themselves a W-2. An individual owner of a single member LLC that operates a trade or business is subject to the tax on net earnings from self-employment in the same manner as a sole proprietorship. You are not allowed to deduct wages you pay yourself. That's a handout? No. LLC can help you avoid double taxation unless you structure the entity as a corporation for tax purposes. Business expenses. LLC members may take tax deductions for legitimate business expenses, including the cost of forming the LLC on the personal return. So the only time that you can actually take those type of expenses is on your personal return. LLCs have become inactive or have no income may still be mandated to file a federal income tax return. Filing requirements will depend on how the LLC is taxed. An LLC may be taxed as a corporation or partnership, or it may be totally disregarded as an entity with no requirement to file. That is the understanding if you did not make any money. Any year you have minimum or no income, you may be able to skip filing your tax return and the related paperwork. However, it is perfectly legal to file a tax return showing zero income. And this might be a good idea for a number of reasons. And the reason is, like for instance, the ones that filed for the PPP dealing with the economic stimulus or SBA, this would have been a perfect example. You didn't earn any income, but you should have filed a return to help you in case you need to apply for some type of loans to let them know that, hey, this year was a down year. And it's just a good practice to get in to file your return, even if it's a zero income or even if you make income. It's just a good practice to get in the habit of filing your return. Now, two members, like what they consider as a multi-member LLC, are taxed as partnerships and do not file or pay taxes on the LLC. Instead, the profits and losses are the responsibility of each member. They will pay taxes on their share of the profit and losses by filing the Schedule E 1040 and attaching it to their personal tax return. So remember, you're going to file your regular tax return, you're going to submit a Schedule E, and you're going to attach it to your personal tax return. Those are things that you will do. That's your responsibility as a partnership. As a single owner, people want to know, how do you pay yourself as a single owner LLC? Owner of a single member LLC, you can get paid a salary or wages. Instead, you pay yourself by taking money out of the LLC profits as needed. That's called an owner draw. You can simply write yourself a check or transfer the money from your LLC bank account to your personal bank account. Those are considered personal draws. That's how you document it, even your records, when you're doing your records for your books. You're gonna say it's your personal draw if you're taking it from the profits and forwarding it to your personal account. This is what it's called, owner's draw. You pay yourself from the single members LLC by making an owner's draw. Your single members LLC is a disregarded entity. In this case, this means your company profits and your own income are one and the same. At the end of the year, you report them with Schedule C of your personal tax return, IRS Form 1040. So some would say, is it better to be self-employed or LLC? You can't avoid self-employment tax entirely, but forming a corporation or an LLC could save you thousands of dollars every year. If you form an LLC, people can only sue you for its assets, while your personal assets stay protected. You can have your LLC taxed as an S corporation to avoid self-employment taxation. So there you go. People file the S corp to avoid the taxation. So some would say, do you have to file a Form 1065? Every domestic partnership must file Form 1065 unless it neither receives income nor incurs any expenditures treated as deductions or credits for federal income tax purposes. I'm going to say this, an inactive business still exists in the eyes of the law. It simply means that it does not engage in any type of transaction or business until the company is dissolved. It will still exist, even when a business is inactive. This doesn't mean it's not subject to certain reporting requirements. So I'm going to say you report even if you do not have any income. Because if you have not closed your business, you should still file your return. If you have zero income, you should always file your tax returns with zero income. And if you decide to close the business, by all means, file the final return so the IRS would know that the company has been resolved. It no longer exists. If not, they're going to assume that you're still in business. This goes with your state and any other type of government entity that requires you to file, that you should always file the final return. Even if you have not did any business in 10 years, you should always file a return to let them know when the last day that your business been open. Then it will stop the unnecessary letters that you'll get later on in life. They don't always send you the letter right then and there. Sometimes they may wait 5 or 10 years before they send you a letter concerning your business that you did not file. Some people want to know, how do you make your LLC dominant? LLC can be dissolved if all members consent to terminating the business. To dissolve the LLC must settle all outstanding liabilities and divide the LLC property among the owners. Then the LLC members must complete and submit a statement or dissolution to the Secretary of State where the LLC was originated. So you see all these people, they inform these LLCs they have not done the proper thing. They say they have an LLC, but they have not submitted the proper documents to the state which they reside in or the state that they state in that they formed their business. These are requirements that if you're in an LLC, you should apply for your state. You have a responsibility to the state as well as the federal to make sure that all forms are filed properly and that your business do exist. Because to form a business with an EIN and have not did your state filing is like not having a business or questionable, which brings questioning in, and you put other entities in your business like the IRS or the state. Hey, some things can be avoided. Now, a lot of people keep asking this question: how much can a small business make without paying taxes? It is regardless if you're a sole prop, even if you're an independent contractor, the amount is $400. Anything that exceeds over $400, you have to report. Anything under the $399 mark is not required. But if you just want to report that amount for documentation, no matter if it's $1, that's your right. Anything beyond $400 is considered taxable. Small business income, regardless, hands down. I don't care if you have a hobby in your home and you decide that if you did a yard sale one time out of a year. I don't care if you sold cookies, candies, lollipops for whomever. If you earn some type of money, the IRS requires you to report $400 or more no matter what. I don't care if you prostitute. If you may earn $400, that is reportable income. Your crime is a crime, but IRS expects you to report anything that you earn over $400. I don't care if you sell drugs. If you earn over $400, your filing requirement is anytime you earn $400, it is required by the federal government to file that income and report it. Hands down. There's been many cases over the years that has brought prostitutes, pimps, and different people among because they have got a guess of them earning so much money, and you have to explain where this money coming from. So it's still even though you're committing a crime, it's still your requirement to file your return if it's more than $400 or more. Hands down. I'm going to close this out on LLCs today, and I will pick up the LLC on another topic for part 2. Hope you're enjoying Beginner's Business Bloopers. Beginner's Business Bloopers. Beginners Business Bloopers. Well, let's start off with the definition. A limited liability company, LLC, is a business structure allowed by the state statute. Each state may use different regulations. You should check with your state if you are interested in starting a limited liability company. So you're going to start with your state first. Owners of an LLC are called members. Most states do not restrict ownership, so memberships may include individuals, corporations, or other LLCs, and foreign entities. There is no maximum number of members. Most states also permit single-member LLCs, those having only one owner. A few types of businesses generally cannot be LLCs, such as banks and insurance companies, Check your state requirements in the federal tax regulations for further information. There are special rules for foreign LLCs. The biggest thing is classifications. A lot of time people get caught up because when they're starting their business, they usually just either do the sole prop, or they may select a S corp or a C corp and just don't know which way to go. But when you're dealing with a limited liability company, IRS gives you the opportunity in the beginning when you apply for your EIN to decide which one you choose to be, and if you need a reclassification. Depending on the election made by the LLC and the number of members, the IRS will treat an LLC as either a corporation, a partnership, or as part of the LLC's owner's tax return. It's a disregarded entity. Specifically, a domestic LLC with at least 2 members is classified as a partnership for federal income tax purposes unless it files Form 8832 and affirmatively elects to be treated as a corporation. So you have to elect to be treated as a corporation. So you have to remember to fill out the Form 8832 with the Internal Revenue Service. For the income tax purpose, an LLC with only 1 member is treated as an entity disregarded as a separate from its owner, unless it files Form 8832 and elects to be treated as a corporation. However, for purpose of employment tax and certain excise tax, an LLC with only 1 member is still considered a separate entity. So there you go for the classification. And one more thing we're going to cover. We're going to cover about this LLC. The limited liability company, possible repercussions. An LLC that is not automatically classified as a corporation and does not file Form 8832 will be classified for federal tax purpose under the default rules. The domestic default classification depends on whether there is 1 member or more than 1 member. An LLC that has 1 member will be classified as a disregarded entity. A disregarded entity is one that is disregarded as an entity separate from its owner. An entity that has more than 1 member will be classified as a partnership. The activity of a single member disregarded LLC owned by an individual are generally reflected on Form 1040 or a 1040-SR, Schedule C, profit and loss from business, sole proprietorship, Form 1040 or 1040-SR, Schedule E, supplemental income or loss, Form 1040 or 1040-SR, Schedule F, profit or loss from farming. An individual owner of a single member disregarded LLC that operates a trade or business subject to the tax on the net earnings from self-employment in the same manner as a sole proprietorship. An individual owner, you understand what I'm saying here, so hopefully you understand this. If the single member disregarded LLC is owned by a corporation or partnership, the activities of the LLC should be reflected on its owner's federal tax return as a division of the corporation or partnership. There are subsequent elections. An LLC can elect to change its classification. Generally, once an LLC has elected to change its classification, it cannot elect again to change its classification during the 60 months after the effective date of the election. An election by a newly formed LLC that is effective on the date of formation is not considered a change for purposes of the limitation. For more information and exceptions, you need to resort to the IRS code. Regulation Section 301.7701-3C, and the instructions attached, which will be a Form 8832 entity classification. election form. Elections to change classification can have significant tax consequences based on the following transactions that are deemed to occur as a result of the election. And then you have your partnership to your corporation. Election change classification from a partnership to a corporation. So a person that has a partnership and they have an interest in changing it to a corporation will be treated as if the partnership contributed all of its assets, liabilities to the corporation in exchange for stock. And the partnership then immediately liquidated by distributing the stock to its partner or partners. And you can find these references on publication 541 under partnership and publication 542 under the corporation of the IRS.gov. You can go there and download the publications. They're free, or you can go to the walk-in office and request one. They should have them in person accessible for you. Corporation to partnership. An election to change classification from corporation to a partnership will be treated as if the corporation distributed all of its assets and liabilities to its shareholders in liquidation, and the shareholders then immediately contributed all of the distributed assets and liabilities to its new partnership. Now, corporations to a disregarded entity. Election to change classification from a corporation to a disregarded entity will be treated as if the corporation distributed all of its assets and liabilities to its single owner in liquidation. You can get more information out of the publication 542 concerning distribution of shareholders. Disregarded entity to corporation. An election to change classification from a disregarded entity to a corporation will be treated as if the owner of the disregarded entity contributed to all the assets and liabilities to the corporation in exchange for stock. And you can follow up with exchange for stock in the publication 542 dealing with corporations. Special rules apply when your LLC has an operating loss. The amount of the loss you can deduct may be limited by the at-risk rules because of the limited liability for LLC debts. Passive activity loss limitations may restrict the amount of loss you can deduct. So, IRS have this publication called 925. It's passive activity and at-risk rules. And it give you all the at-risk rules. So hopefully this is to give you clarity on the things that can occur when you're trying to change from one entity to the next entity and dealing with LLC. So hopefully you enjoyed this podcast, and I hope to hear you soon. BBB, Beginner's Business Bloopers.